Hello students, this is Professor Taramati Nakod from Government First Grade College, Kundgol. Now we are discussing on hire purchase and installment purchase system. So earlier class we know how we are going to calculate cash price and interest. Okay, so in today's class we are going to see the journal entries in the books of hire purchaser. Okay, so it can be very clear with the help of a problem. Okay, let me read the problem. On 1st April 2013, the Tirupati Industries bought a machine from HMT Limited on hire purchase system. The cash price of a machine was 37,250 and the payment was to be made as follows: 10,000 on signing of the agreement and the balance in yearly installment of 10,000 each on 31st March every year. The HMT Limited charges interest at 5% per annum and Tirupati Industries writes off 10% every year on reducing balance system. So there is a depreciation. Then pass the necessary journal entries in the books of Tirupati Industries. Now in this we are going to first make the calculation of interest, okay, and cash price in each installment and depreciation calculation. Now let us take the chart. So in the chart we have to go with this, the chart first column you have to write the date, second advance or installment, third interest, then next principal, then the last column is balance. Now first down payment, if any, it is to be written 10,000. Then write all the installments in an installment column. So 10,000 down payment and 3 installment of rupees 10,000 each. Okay, so now you are going to write it in installment because you can see the principal amount given was 37,250. If you add this total, this is 40,000, means it is inclusive of interest. Okay, so once you have written this, then you go with the calculation part. So as this 10,000 is a down payment amount, it does not have any interest, so this full amount is taken as principal. Then the cash price was 37,250. So from that 37,250, if you deduct this 10,000 rupees, then 27,250 after the payment of down payment. Then first year installment. Then at the end of the first year you have to calculate the interest. So interest is calculated on this outstanding balance. So that is 27,250. So on 27,250, 5% means 1,363. So from this advance amount, if you deduct interest, the principal amount comes. So here from this 27,250 deduct 8,637. So it is 18,613. Okay, so this balance is again used for next year interest calculation. Okay, so here 18,613 into 5%, 931 is the interest for the second year. Then again the same way, advance installment amount minus interest is a principal. So here from this balance deduct this principal amount 9544. So last year you need not have to make the calculation with the rate of interest, you just have to take the difference. So how much principal was outstanding? Principal amount outstanding is 9,544. Okay, here it is. Then the installment was 10,000. So 10,000 minus 9,544 means the interest, the extra amount you have paid is a interest for 56. Now you can make this total interest 2,750, principal 37,250. Okay, installment 40,000. Now let us understand why this bifurcation of interest and principal is being done. So the principal amount will go to asset account, interest will go to interest account. Okay, for that reason we need this in a different column. Okay, now let us understand the calculation of depreciation. The value of asset, the cash price, 37,250. So 10% of that is 3,725. Deducted, there is a balance. Again, on that balance 10%, 3,353. Again deducted 30,172. Last year, third year, 10% depreciation, 3,170. So after deducting third year depreciation, you get 27,155. Now you can go with the journal entries in the books of higher purchaser, that is Tirupati company. Okay, now first entry is making the down payment due on the signing of the agreement. First due is advance, that is down payment. Machinery account 10,000, HMT account 10,000, that is being down payment due. On the same day amount is paid, so HMT limited account debit 10,000 to bank account 10,000. So it is due and payment of down payment. Okay, then at the end of the first year, the first installment becomes due. Once the first installment becomes due, you have to pass this journal entry. Machinery account is debited with first year principal amount and interest with first year interest. Then to bank with the total installment. So that chart you have to refer to write these two amounts. Okay, then once due entry is made, next payment of the first installment, that is HMT account debit 10,000 to bank account 10,000. So first installment is paid. Then depreciation should be charged at the end of every year. So for charging the depreciation on asset, depreciation account debit, we know how much is the depreciation for first year, 3,725. Okay, to machinery account 3,725. Then as we know that interest and depreciation are the expenses of the business, nominal account should be transferred to the profit and loss account. So once there is a transfer entry, profit and loss account debit with the total of interest and depreciation. So total interest and depreciation account credited, total is debited to profit and loss account. Then next year again same entry, first installment due with the principal amount to the machinery, interest amount to interest account, credit, total installment to HMT. It is a due entry. Payment entry, HMT limited debit 10,000, bank account 10,000. Second installment is also paid. Again the depreciation charge, depreciation account debit 3353 to machinery 3353, that is second year depreciation. So after that again you should transfer interest and depreciation to profit and loss account with the second year interest and the depreciation, that is 931 interest and depreciation 3,353. So total 4,284. Then next year the next installment, third installment becomes due. Machinery account interest account debit to HMT 9,544, 456, 10,000. Then third installment is paid, that is 10,000, 10,000. Depreciation for the third year 3,017, 3,017. Then last year, that is third year interest and depreciation transferred 3,473. That is a total of interest and depreciation. So these are the journal entries in the books of hire purchaser. So first you have to make a due entry, second payment entry, then depreciation entry, then transfer entry. Regularly you are going to pass 4 entries. In the first year, additional 2 entries are going to be done, that is due of down payment and payment of down payment. Okay, then so with this we are going to close today's class. I think this class is very clear to you. Thank you.